Markets are no longer driven by just fundamentals or technicals. They're being shaped in real time by data, sentiment, and artificial intelligence. Today, we're looking at how AI native platforms like SPECTRE are turning social signals into trading insights, and why assets like SIREN are suddenly getting attention.
Welcome to the 2026 On-Chain Intelligence Playbook. Today, we will discuss how to survive the automated market cycle through AI-driven behavioral analytics, operating in a market state that is fundamentally non-stationary. We begin by acknowledging a harsh reality. Traditional charting is no longer enough. Crypto markets are now driven by leverage, hidden narratives, and off-chain coordination, making classic technical analysis, which forces static, deterministic rules onto a probabilistic environment, obsolete. The central question for analysis has shifted from asking, "What is the price doing?" to "Who is acting and how is capital rotating?" This brings us to a massive analytical paradigm shift. We are moving away from reactive signals like moving averages to predictive signals based on realized P&L and supply dynamics. Instead of focusing on anonymous, aggregated volume, 2026 AI intelligence focuses on-chain behavior and the positioning of identifiable entities, yielding probabilistic risk distributions rather than deterministic entry and exit levels. To navigate this, we look at the landscape of AI analytics platforms, categorized across macro and micro levels, as well as on-chain and off-chain data. At the macro level, platforms like Glassnode map market regimes, while Sentiment tracks macro sentiment. On the micro and token level, tools like Arkham provide entity-level wallet attribution, and Kaiko analyzes microstructure and liquidity depth. The primary driver of this market shift is the exponential rise of the autonomous actor. Since January 2026, there has been a 39,000% growth in autonomous agents, reaching 130,000 agents actively using the ERC 8004 protocol standard. The core insight here is that economic activity is decisively shifting toward machine-speed microtransactions. Infrastructure fundamentals dictate where these agents migrate. BNB Smart Chain currently leads the pack, followed by Base and Ethereum mainnet. BNB's distinct advantage is the BAP 578 standard, a verifiable, tradable, on-chain reputation and track record standard built specifically for the autonomous economy. Let's break down the anatomy of an ERC 8004 autonomous agent into 4 layers. It starts with an off-chain brain, utilizing machine learning. This connects to an identity layer using the ERC 8004 standard to maintain an on-chain identity without API key vulnerabilities. Next is the reputation layer via BAP 578, and finally, the execution environment, where trades are automatically routed at machine speed. The autonomous intelligence loop. These agents operate in a continuous, non-human liquidity loop. The observers, AI platforms, ingest raw data to generate signals, which the actors, ERC 8004 agents, use to autonomously execute thousands of microtransactions. This creates a reflexive action where the resulting market shifts immediately feed back into the observers to start the loop over again.
Quick pause here. If you're finding this useful, go ahead and like the video and subscribe. I break down trends like this so you can stay ahead of what's actually moving markets.
Because of these dynamics, we are seeing a bifurcation of smart capital. On one side, institutional money is focused on structured yield, treating assets like ETH as a baseline cash flow asset. On the other side, whales are executing asymmetric rotations, hunting for uncapped upside in pre-exchange, protocol-level intelligence tokens because deep liquidity caps the returns of legacy assets. For those seeking that alpha, we utilize a 5-step pre-SEX discovery funnel. It starts by filtering for macro narratives and isolating high-throughput chains. Then, we apply a hard valuation threshold, ideally between $5 million and $30 million, to ensure mathematical probability for high returns. Verify liquidity and sentiment, And finally, execute on decentralized exchanges before centralized exchanges provide exit liquidity. To execute this, your 2026 intelligence terminal requires two key assets. First is DeepSnitch AI, DSNT, the Web3 native Bloomberg terminal that conducts real-time contract audits and extracts alpha from raw one-chain data. Second is SPECTRE AI, SPCTT, a machine learning sentiment engine that maps sentiment against price and detects continuous changes via probabilistic models. Let's look at a case study, the 143% breakout of SIREN. The surge was predicted by three sequential signals: an automated liquidity pool audit cleared by DeepSnitch, entity accumulation detected by Arkham and Nansen, and finally, an institutional narrative sentiment spike flagged by SPECTRE AI. The result was SIREN surging 143.5% in 24 hours to a $1.68 billion market cap. We validated this breakout through cross-asset confirmation. SIREN showed over 150% relative performance gains against major assets like BTC, ETH, and SOL. Market structure data, notably an 8.16% volume to market cap ratio, suggested genuine distributed buying pressure rather than thin book manipulation, while AI models effectively map the next major resistance level. This methodology holds up across other major 2026 narratives as well. For example, Virtual's protocol, Virtual, moved from $0.05 to $5 after on-chain intelligence detected a rotation into AI agents trading against DeFi liquidity pools. Similarly, River, RIVER, saw a 500% year-to-date gain following early detection of cross-chain liquidity expansion prior to major CEX listings. In conclusion, the terminal state of the 2026 market is clear. Traditional technical analysis was built for humans trading against humans. Today, the market is defined by autonomous agents executing at machine speed. Asymmetric returns now belong exclusively to those utilizing on-chain behavioral intelligence to identify capital rotation before it happens.
AI isn't replacing traders, it's giving them a new edge. The real question is, can you separate signal from noise fast enough? If you want to stay ahead of where markets are going, this is just the beginning.